Hello, trading has closed on June 15th, 2021. We always begin things with our disclaimer, so let's do that. This is my trading plan for tomorrow, June 16th, 2021. I can be completely wrong. Trade at your own risk. Please observe the rules of my channel, tell your friends, and please click like. Looking for the pattern with the early high, there it is. Tomorrow's pattern has the early low. There are quite a few things not to like about today's action. It's never good when you hit a new all-time high and then close red. It's particularly not good when you hit a new all-time high and then close under multiple prior highs. This is called churning at the top. Now, time doesn't run out at today's close, it runs out at tomorrow's open. So if we gap and overtake this high, all this negativity goes away. Take out the high, all the negativity goes away. This is a pattern which usually is a positive pattern, rallies into a new high at the close. Well, there's a high, but it's not over this high. Again, you can gap up, kill the negativity of the pattern, but if we don't gap up, gap in either direction, hit a new high fast, the pattern normally leads to a straight line drop. So by tomorrow's open, expect to see a gap in one direction or the other, which could be quite substantial. If it doesn't happen right at the open, it should happen soon thereafter. During the day, MEJT said this drop was false, price would retrace. We had this good rally in the afternoon. MEJT said it was false, price would retrace, and they did. This is the DeMark combo sell signal. Now, we used to have some X's, and X means that a bar didn't meet all the criteria, but the last three bars don't have to meet all the criteria. As of yesterday, we have no fudging, no X bars. We have a real combo sell. Now, a lot of these haven't worked, but they haven't worked because price didn't drop. Price just consolidated instead. When you have an overextended condition, you can get rid of it either by dropping in price or consolidating in time. And so far, we've just consolidated in time. But as you can see, we haven't moved too much after the last signal was given. We didn't drop. We didn't really rally too much either. So it's a sign that we're overextended. Now I have to make one correction as to the date. I've been saying for the last few days that on Tuesday, June the 16th, we had a Lindsay low to high. Well, Tuesday is the 15th, so I had to correct that. And you can see we have low to high. So as far as the time goes, we have a place where Lindsay calls for a possible top. But how about price? If price doesn't fit, this doesn't work. Well, this is not the only count. I've been very reluctant to count this drop as ending here. Let's go over the reasons. I think it's clearly an impulse. 5 waves. Normally, when there is an impulse, wave 2 and wave 4 are not of the same character. And normally, when there is an impulse, wave 5 truncates and wave 3 ends it. So that's why I prefer the ending here. But those are just tendencies. They're not requirements. And it is possible to count wave blue A ending here. And when you do, if that's the end of blue A, you can have magenta A and ABC. And then magenta C equals magenta A right at today's high. So we have a Fibonacci Elliott pattern making today compatible with a high. We have not only this low to low to high, but we have this low to high, giving a Lindsay potential top. We have the DeMark sell signal. We have a normally bullish pattern which will fail in spades if it doesn't overtake the high early tomorrow. We have a new all-time high, negative close under all these highs. None of these are bullish things. Now you still need to do more than just threaten. You need to make the move. But if we get this big drop tomorrow morning, if that happens, I think there's a very good chance this high is going to hold before we have a significant fall. Doesn't mean it'll hold forever. Wednesday's pattern features the early low. We could gap up. Today's pattern is normally a bullish day, rallies into a high near the close. Time runs out tomorrow morning. If we don't gap and promptly overtake today's high, then lower prices should lower prices should print. In that case, the odds favor a straight line drop. The FOMC meeting tomorrow often is followed by wild moves. I personally find them hard to predict. That being said, we have a confluence of indicators from Elliott, DeMark, and Lindsay, which mark today's high as a candidate for the rally to end. Decliners once again outnumbered advancers despite the new high. Breadth deteriorated. And I look at the number of strong stocks. Quite a few of the ones I follow dropped today in spite of the new high. So if you open with a sharp gap down tomorrow, or even if we don't get the follow through on the upside, we need only follow through and a confirmation on the subsequent day to confirm we made a significant high. This really is a perfect setup for a top. Can still be invalidated if we go through it. If we go through it by a small amount, I don't think anything changes, particularly if it gets reversed fast. And there have been a number of other steps along the way where I thought the high was in. I'm going to say there's a good chance a high is in, but it needs confirmation, ideally, by gapping down smartly and then following through on Thursday. But this is a very negative formation, which could still be invalidated. But if it is, a lot of people's indicators will have to fail all at the same time. Tomorrow has the early low, and that's today's call.